There is a big question mark in economics. Why did the United States economy in 1830, approximately, the time when Tocqueville was in the United States, took over Europe? I mean that starting in the 1830, the income per capita in United States overcame the European income per capita. And Europe was never able to catch up with the United States since nearly 2 centuries. This is a very interesting question. And there are many answers. One has to deal with the free market and regulation. I have another answer. My explanation is that the United States took over because it is a democratic country. What do I mean by that? In the United States, I mean, people want, they all want the same stuff. And though the producer, the entrepreneurs invented marketing and standardization in order to answer the need of the people. Okay? It has to do with an egalitarian society. In Europe, which were aristocratic society, it was not the case. The entrepreneurs were working for the elite. So we were very good, at building perfect object for a minority. But the notion of management, mass production, and standardization always was late vis-à-vis the United States. If you take, electricity, television, the movie industry, everything was invented in Europe, but it was marketed in the United States. Because in Europe, we are more interested in perfection and technical innovation than in selling to the people. So the strength of the United States come from this democratic background. And I think this is why Europe was never able to really catch up with the American economy. So it's not only a question, of structure, and it's a question of what the society is about. Now, the crisis. First of all, a crisis in a free market economy, like in any economy, is, of course, no surprise for economists. It's no surprise because it's built into the system. Why is it so? It's built into the system because development is based on innovation. If you have no innovation, you have no development. Innovation is the only source of economic development. But you can't know beforehand if an innovation will work or will not work. You don't know. You have to do the experience. You have to learn the product on the market. Okay, so I invent the iPhone. Will it work? I don't know. I launched the iPhone and I completely transformed the cell phone industry. But it could have been a failure. Let's turn to the financial sector. I invent a new kind of securities, based on the mortgage. Sometimes it works, sometimes it doesn't. It worked for a certain time, at a certain level, it doesn't work anymore. So innovation sometimes turns wrong. And when an innovation turns wrong, you have a crisis. So the crisis is connected with the very notion of innovation. If you don't innovate, you don't have growth. If you do innovate, you run the risk of innovation bringing a crisis. And this has always been the case. So to have a growth without innovation and growth without crisis is by definition impossible. Nobody has ever devised a system based on growth innovation without a crisis.